Hello everyone. In this video we are going to discuss about the developments in the India's balance of payment during the Q1 of financial year 2026. So recently only RBI has released the data related to the balance of payment during the Q1 of 2026. Let's start the discussion. In Q1 we are talking about April, May, June, right? April, May, June 2025. That's the 2025. So this is the financial year 2026. 2025-2026 is the financial year, and here we are talking about the Q1 data, Q1 data. Okay, so India's current account deficit, CAD, there was a deficit in the current account, stood at $2.4 billion. Okay, $2.4 billion. Now you need to remember this particular amount as well as the percentage of the GDP. It is 0.2% of the GDP. Now it has substantially improved. It has substantially improved as compared to the year on year basis, right? If I compare it year on year basis, last year in the same quarter we were having $8.6 billion. This is deficit. This is deficit. So can I say that we have reduced our deficit from the $8.6 billion to $2.4 billion, and that's quite good, right? That's the year on year growth. That's the year on year basis reduction in the current account deficit. Earlier it used to be 0.9% of the GDP, and now it is just 0.2% of the GDP, and it performed well. I can say it has crossed the expectations as well of the experts, so it's a good data. Now what are the key drivers of this particular current account deficit narrowing, right? The current account deficit has been narrowed. We were making huge imports and the exports were quite lower as compared to the imports, right? So this gap has been now narrowed, right? There is a narrow gap now in this particular current account. That's what current account deficit is all about. So service exports have surged. Okay, service exports have surged. We all know that in India service exports are a great source of foreign earnings, right? So there is a surge in the service exports. The receipts were earlier $39.7 billion. Now they are $47.9 billion, and this is aided by the growth in the business and the computer services. So there is a growth in the business and the computer based services, so that's why this is driven. Remittance inflow, again, people who are living in the foreign countries, they are remitting to India. That's what remittance inflow is all about. Has increased to $33.2 billion, right? So it's a 18% year on year growth. So I can say that service sector exports plus the remittance inflows are the two major contributors here in the CAD narrowing. However, if we talk about the merchandise trade, it remained weak again only, right? There is a merchandise trade. There is a merchandise trade deficit in India. The goods trade deficit widened to $68.5 billion. Earlier it used to be 63.8. Now it is 68.5. Right. So by $5 billion it has increased. I am talking about the merchandise trade deficit. When we talk about balance of payment, no doubt CAD has now, the channel of the CAD has now shrinked, but the overall BoP, balance of payment, remained in surplus only at 4.5 billion USD. Okay, please do remember the BoP data as well. BoP means balance of payments. Though in the Q1 of financial year 2025 it used to be 5.2 and now it is just 4.5 billion. Okay, and how it is driven? Because of the financial inflows from FDI, FPI, external commercial borrowing. So FDI was at $5.7 billion. FPI at $1.6 billion, and external commercial borrowing has again increased from 1.6 billion to now 3.7. So I can say that there is an increase in almost everything except the FDI. FDI last year was used to be 6.2 and now it is just 5.7. And here you can see the RBI published data as well. It was published on 1st of September 2025. So there is too much data in this particular news, guys. So what you can do is, please do remember the CAD, current account deficit, $2.4 billion, right? Merchandise trade deficit, now it has again increased as compared to the previous year. It has increased by $5 billion. So now it is at $68.5 billion. Net receipts, net service receipts has again improved. So that's why again shrinking the CAD overall. Plus you need to remember the data related to FDI, related to FPI, right? FDI, FPI data can also be important. So FDI data is 5.7 and FPI data is 1.6. ECB data is 3.7. Again, everything is in increasing trend except the FDI here. FDI here, right? Earlier it used to be 6.2, but now it is just 5.7 as of now. If we talk about the NRI deposits, they recorded a lower net inflow again. So earlier they were around 4, now they are 3.6 USD billion. There was again an accretion of USD 4.5 billion, right? 4.5 billion to the foreign exchange reserves. So 4.5 billions have been added in the foreign exchange reserves as of now. Earlier it used to be, previous year it used to be 5.2, now it is 4.5. Okay, and here is all the data. Here's the tabular summary of all the data that we just discussed here. You can have a look at the current account. So this is 2024 and this is 2025. You can have a look. It is as of now minus 2.4 because this is deficit, so that's why it is in minus. You can have a look at the net data of the services as well, net receipts from the services as well, portfolio investors, NRI, ECBs and so on that we just discussed, right? Then for those who don't even know what BoP is all about, balance of payment is all about. So it's nothing but a financial diary of a country that records all the transaction with the rest of the world. So let's suppose if we talk about India. So India is recording the financial transactions with all over the rest of the world, right? All the other countries. So it's nothing like BoP only, right? It's nothing but BoP only. So it's money coming into India, money going out of India. What are the components? Current account as well as the capital and financial accounts are included in this. In current account, we do have trade in goods, we do have services, remittances, and in capital account, we do have FDI, FPI, etc. Right? If I talk about the current account deficit, it is nothing but a gap between the country's outward payment of goods and the inward receipts. So let's suppose how many exports I am doing in comparison how many imports I am doing, right? How much I am able to receive in terms of foreign currency, how much I have paid in terms of foreign currency. So CAD happens when the India spending is more in terms of foreign currency than it is earning in the form of goods and receipts in the form of by selling the goods and services and transfers and all, right? So why it is current account deficit? Because we are paying more than what we are receiving, right? That's why it is a deficit. That's why it is a deficit. Certain other terminologies as well, like merchandise trade. So here we are trading physical goods, right? When I talk about service surplus, we are exporting our surplus of the, we are exporting our services. We are rendering services to the foreign countries, like it can be IT service, it can be business service, it can be any other service. And what do you mean by inward remittances? Now there are a lot of people who are earning money outside India as well, right? In the foreign countries, and they are sending it again in their home in India. By working abroad, they are able to send the money into India. So again, that's an inward remittance, right? FDI, FPI, we have discussed multiple times. Still, let me just quickly tell you, FDI is nothing but when a foreign country, a company in a foreign country is investing directly in the Indian businesses, right? They are directly investing in the Indian businesses. So that's a stable and long-term capital inflow as compared to FPI, which is nothing but buying Indian company share. Let's suppose some investor, some foreign investor is buying Indian stocks. That's nothing but a FPI. Okay, that's nothing but a FPI. It can be short term, it can be volatile, which is just the opposite in terms of feature of the FDI. External commercial borrowings. Let's suppose I'm an Indian company. I want to raise money in dollars. Why? Because in USD, if I raise money, it's quite cheaper. The interest rates are quite cheaper. So what I can do is I can raise money from the United States of America as well. I can take loan from USA as well. So that's purely external commercial borrowing. Okay guys, so thank you so much for watching this video. Fully packed data session. Again guys, I'm telling you, test your RBI grade B readiness. You need to answer 10 questions and you'll be getting personalized report card on your mail and preparation recommendation as well. Plus you can start practicing the previous year questions as well. 2024 previous year question are for RBI grade B is completely free on the Oliveboard website. So thank you so much guys. Bye bye. Take care. See you soon.